Most people will be in a lower income tax bracket when they retire because they're living off of less money. But there's a lot of people, and specifically clients that we work with, that will never be in a lower income tax bracket, right? Maybe they have a pension, Social Security, and if they have a big enough retirement account, they've got to take distributions at age 72. And all of those three things combined can push them into a higher tax bracket. What we do know is that taxes are going up in 2026. So they're going to revert back to where they were in 2017 prior to the 2019 Tax Act. So they are automatically going to go back up. And the biggest problem with taxes is it leaves your retirement account susceptible to whatever legislation changes happen in Washington. And at Wayland Financial, we want to be able to plan for those things. And you don't have to be 100% right, you just have to be right on the margin. So if you're doing the planning with clients and taxes just go up marginally versus a much higher tax projection, you're saving them a tremendous amount of money in the long run. And again, you're putting your clients in control of what their future is instead of having Washington decide what tax policies are going to affect them from a distribution standpoint. What we know about taxes is that we're living in the lowest tax environment in modern history. It's a fact, it's not a political statement. And we've spent $5 trillion over the last 3 years that's been added to our deficit. How do we pay for that, right? There's not enough billionaires in the United States of America taxed at 100% of their income to pay for these things. So it's going to be our problems, our children's problems, to be able to pay for these things. And if you look at more progressive tax systems, let's say in Europe, and in a lot of ways with healthcare benefits and social benefits that we continue to build out in this country, which are really great for those people that need those, they cost money, right? And if you look at the average tax rate in Europe, it's somewhere close to 50%. So if we just get from partially where we are now to that number, tax rates will be significantly higher on a percentage basis. And if you're dealing with individuals who have saved money in qualified accounts like retirement accounts, 401ks, 403bs, IRAs, when they're ready to go into that spend phase of retirement, every distribution that they take is 100% taxable. And if tax rates go up, they have two decisions to make. They can live off less money, or they can take out more, which increases chances of them running out sooner. So again, we like to put our clients in control of their future, not let somebody else decide what happens to them.